Joe's Happy Hour, a show about markets and life hosted by Joe Fahmy. This podcast is for informational and entertainment purposes only and should not be regarded as personalized investment advice or relied upon for any investment decisions. Joe Fahmy is an employee of Zor Capital, and he and his clients may maintain positions in the securities discussed in this podcast. All opinions expressed by Joe are solely his own and do not reflect the opinions of Zor Capital. The views expressed by guests are their own, and their appearance on this program does not imply an endorsement of them or any entity they represent. Thank you and enjoy the show.
Mike Webster.
Howdy.
Welcome.
Yeah, it's nice to be here, man.
Thanks so much for being here.
Yeah.
I feel like we could probably talk for about 12 hours on the markets, but we'll try to keep this. It's Joe's Happy Hour. We'll try to keep it
1 hour,
condensed to an hour. Just a quick introduction, Senior Market Strategist for Investors Business Daily, which we'll refer to as IBD for the folks who don't know. You also run IBD's Swing Trader product, and you're a panelist on IBD Live regularly Monday, Wednesdays, and Fridays.
Mm-hmm.
You have done so many other things formally, and we're going to get into that as we go through the podcast. But as you know, I always like to give my guests an opportunity to introduce themselves and maybe tell the audience a little bit about yourself.
Well, I'm your buddy.
I forgot to say amazing friend and kind soul.
So I'm just a random dude. That's how I like to, think of myself as a random guy who's trying to help others, and a good father. And that's about it, man.
That's great stuff. Yeah. Your market knowledge is amazing. We're going to dig into this. We're going to cover 400 pages in an hour.
That's a good book. Everyone should get that book.
This is, in my opinion, one of the best books on stock market, everything, really. Yeah. Research, analysis, just fundamentals, technicals, everything.
It's basically that and Livermore's stuff, like Reminiscence of a Stock Operator and Jesse Livermore, How to Trade in Stocks.
How to Trade in Stocks.
Those three books are everything.
Basically all you need. Yeah, and no offense to anyone, because I know there's a lot of amazing books out there, but when you ask anyone their top books, those three consistently are at the top of the list.
Yeah, and I just go back to all those and the Market Wizard series, like the entire series.
Yeah.
Like all of those are great. You can just, I like audio, so I just listen to them over and over and over again.
Yeah. Well, the only thing with this is I think the greatest lesson in technical analysis is the first 100 pages, which you helped mark up and help consult on all that stuff, correct?
Yeah. Well,
you were involved?
Heavily involved with that. And that was fascinating because if you look at the beginning of the book, it starts in the 1880s and goes all the way through.
Which you were around during that time. And
I'm not that old. I've got some wrinkles, but I'm not that old. But Bill's strategy was to basically look at the past and learn from it. It's pretty basic, right? Just look at stock. He wanted to figure out how to buy growth stocks and try to hold them for as big of the move as possible. So he recognized what they look like at the beginning of the move, what they look like in the middle, and then at the top. And he'd create these things called model books. Who would just every year is like what was up the most, study them, and that's what his system was built off of. But it started when he started trading, and that was in the 1960s, early 1960s. So everything was based on that time forward. But when the bubble burst in 2000, and we were going from the 2000 to 2002 timeframe, and I was knee deep in this research of 1929 to 1932 because they lined up perfectly. Now everyone talks about it. No one was talking about it at the time, and I was so just sucked into that, like the history was repeating itself, and it repeated itself exactly the same. But we didn't have individual stock charts to go off of. So I went to him and I'm like, I really want to study the things from 1932 to 1935. Can we buy this data? And the data wasn't available. So to make a long story short, we hired a group of temps, and they went through the old newspapers and just actually the high, low, close, volume.
They created the charts off of that data?
Because we couldn't. So Charles Harris and I, good friend and former co-worker, the two of us headed up that project from 1880 through 1960, filling in what no one had ever seen before. So during that whole project, it was a multi-year project, cost Bill a ton of money and hiring all these people and everything, and a ton of my time because I headed up that group. And I was scared to death, man, because I thought all the stuff that we preach of like, this is, anyone who knows the system, like this is a cup with handle, or this is a double bottom, this is where you buy it, this is where a climax looks like, and this is where you sell it and all that. Just didn't know if it was going to work prior to 1960 because it was out of sample.
So you were concerned you did the last 60 years or so, you were concerned the 60 years before that might not match up.
I was scared to death.
Okay.
Because Bill, was my idol, and rest in peace. It's coming up on 2 years without him on the 28th of this month. And he was interesting to give bad news to, so to speak. So I didn't want to be the one to tell him, hey, your system that you've spent your entire life teaching and building, businesses on, like his William O'Neill and Company, which was the institutional version or side. That's where I worked originally. And now IBD, where I work now, the retail side, that it was this whole thing built on stuff from 1960s forward. And then I was going to have to be the bearer of bad news if it's like, no, Bill, it didn't work like this before, because it was always fear, greed, and hope is what makes the market go up and down. And that's what Jesse Livermore taught us, reminiscence of a stock operator. And when we went through it, it was just such a sigh of relief. Everything in 1880 worked the same as 1980, and 1910 was the same as, in 1950 and in 1970.
So the patterns were all the same.
All the same.
Wow.
And that's what you see in the front of the book. And when we were doing that version, and I was helping him with that version and the other one, the third and fourth, he wanted to put all those charts up front because he said it was so important that people understood that history just repeats itself. What happened 100 years ago is going to happen now because, fear, greed, and hope doesn't change, right? Even with algos
the human mind and emotion doesn't change.
Not at all.
So I think the first 100 pages is one of the most valuable lessons in technical analysis, to study all the charts that you guys were gracious enough to mark up in detail.
Yep.
Because as they say, history doesn't always repeat itself, but it tends to rhyme.
Yeah.
So I remember in the late 20s, there were 300 or 400 railroad stocks, because at the time, that was the crack invention of the time. And in the late 90s, it was the internet.
Yeah.
And it was 300 or 400 stocks that went up like crazy. And then when the dust settled and both bubbles popped, a handful were left, or roughly whatever the number. So it's literally the same story.
Cycles, man.
But it's almost like not enough people were around back then. So the cycles, the market's almost evil enough to make sure, okay, anyone who saw this is dead now. Yeah. So we're going to repeat it with a new invention. So no one would think that, but you guys were kind enough to kind of give us that historical lesson.
And he was kind to pay for it because it costs a lot of time, like my time and Chuck's time of what we could have been doing, and all the temps that we had and paying, to build out this stuff and build this historical database. It was a big commitment, and he was a tight guy. So he was very tight with his money, even though he was very wealthy. You wouldn't have thought, like when we shared an office together, on the way out, he would always turn the lights off.
Yeah.
To save on electricity. And
so
he
literally was your dad who turned following you around the house.
Bill, I'm still here. Or a piece of paper that you have right there, if there was a paper clip on it and he was going to throw away the paper, he'd take that paper clip out to save it. So here's this billionaire.
He literally is billionaire next door.
Yeah, that was Bill, and learned a lot from that style of living.
Wow. Give the audience a little bit of your background getting into finance and how it led up to you working at IBD.
Was that book. So I was working at T. Rowe Price, which was a mutual fund company.
Yeah.
And, I was there from straight out of college. It was basically glorified customer service type of thing, and it was never going to lead into portfolio management. I didn't realize that at the time. When I did realize it, I got his book. In fact, my parents bought it for me in '95 for Christmas because I said, I just want investment books. That's what I want for Christmas. They were saying, what do you want? And so I went down to Barnes & Noble, and I just sat there, book after book. And then when I picked up Bill's book, it was the red version, the second edition, and I'm like, this is it. This made so much sense to me. It was obviously before the charts in the front. And I said, I've got to work for him and I have to be his PM. That was in 95. And so in 97, I got in to his research department. And that was a lot. It felt like forever. In the end of 99, he gave me money to run. And I had to prove myself in the market that I could do it in my own account. I normally don't talk about this, but it is in the book. That year at 99, I was up like 1,600% in my own account. And it really should have been a lot more because I was just trying to pick stocks before he would put them on his institutional buy list and just trying to prove that I knew the system. I wasn't trying to make money. It was just I'd buy these stocks, try to get it before him, and then as soon as he put it on the list, our compliance rules were then I would have to sell it. And so I was just trying to learn the system.
Okay.
And I backed into it, kind of forced me into swing trading, which I didn't even know was a thing because I would be buying it exactly right. I was really dialed in. And then he might put it on a little bit. He was a little later to put it on. And then I'd have to sell that. And then I'd have that money to buy the next stock. And so I was just doing the short-term trading, not intending to do that. That was never the intent. It was just, I was just trying to get noticed by him. And it was really hard to get noticed by him. I could talk for hours about how hard it was. But then finally at the end of 99, he gave me money to run. And
I picture you juggling in the office and maybe wearing like face paint and just like, do I have your attention yet?
It was that was we'll talk about that in the future, man. That was a long story and it was a long haul and it was very, 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 very difficult. But I'm glad that I went through it because I look back now at those 3 years from 97 to the end of 99, early 2000. At the time, it felt like forever. But now that we're old, right? You go, that's only 3 years. That's no big deal. But it felt like 3 decades,
Yeah.
And it was a grind, but getting to work with your idol and then getting to share an office with them. And then we would talk throughout the day because we'd manage. Then I ended up managing that list with them for about 15 years. And we'd talk every Sunday night for an hour and a half. And I'd work all Sunday for that call and prep for that call because you had to be on your game, if you're going to be picking stocks with Bill. And I just learned so much. I paid attention to every word he said every single day and I never took it for granted. I knew I was working with the Livermore of our day.
Yeah. You're in the presence of greatness and you want to absorb everything he's saying. The list you were talking about, just so the audience knows, this is an institutional list or portfolio
at that time,
list.
They've sunsetted that when he retired.
Okay.
They is a new name, but we would, like our biggest client was Fidelity.
Okay.
Yeah. So we have hedge funds and mutual funds. And so you would have to figure out this list. And we also had shorts on there too, like stocks to avoid, but basically short setups. And you would have to decide when to put it on, when to remove it. And in the battlefield is a lot different than in theory, someone just saying, oh yeah, I would have bought it here exactly right. Well, in the battlefield, it's a little bit different, and it was a lot of fun.
That's cool. How did you get to the point where you ended up in the office with him?
Well, so I started running money for him at the end of 99. My first trade was January 13th of 2000. And I impressed him enough with he would always have like 10 PMs, because you'd be hot, someone else would be cold, or you'd be cold and someone else would be hot. And so he would just move the money from whoever's cold into whoever's hot. So he liked having a stable of racehorses, basically, is what we all were. And, you're either golden or you're not, and I was golden and then I was not, and then golden and not, and everyone was, that's just that's the industry, how it is. Right. You're as good as your last trade. And I was really locked in and we really gelled well together for projects. So I created a bunch of stuff, a lot of intellectual property for William O'Neill and Company, as well as for IBD. Basically, if Bill didn't make it, I made it, and that was fun, and that's how we would work so well together. I told this story the other day to someone that where the first time he asked me for my opinion, it was something in the newspaper, and he said, "Oh, Mike, which font do you like better and which layout?" And he left the room, and I had this little magnifying glass, and I went over when he left and was looking at each one and seeing which one was the best one. And then he walks in, and he's like, "What are you doing? What are you doing with that magnifying?" I'm like, "You asked me for my opinion, and so I was going to give you a detailed thing." And then he realized that we were on the same. We were perfectionists when it came to creating products or services, and not saying that everything always turned out that well or perfect, but at least that was the intent. And he was the king of that. I learned so much from him of what to leave out, what to put in, and you always want to try to make things as simple as possible, which is so difficult,
Well, it's a complex subject.
Yeah.
Yeah. It's not like a coloring book. Like, okay, here's fill in the circles and here are 8 crayons. Like it's not a linear thing. There's so many nuances to trading and investing and all that. I usually like to get into lessons at the end, but since we're talking about this, what would be your top, and I know you have a million lessons, but I'll let you try to condense it into top 3 lessons market-wise you learned working close to Bill, and top 3 life lessons.
That's good. So I would say the most important thing I learned from him was his flexibility. So if he were with us right now and he was talking about the market, whatever he told you about the market, his thoughts, one, he wouldn't predict, he would just interpret what is the market actually doing? Is it acting normal and natural? Is it healthy? Is it under distribution, under accumulation? What would be logical for the next thing? Not predicting, but what would be logical based on his interpretation of the market right now? And he could be wildly bullish. On Sunday night, it was very, very common for him to be very wildly bullish on Sunday. And so we're deciding what names we're going to put on the list, what we're going to remove. Then he would talk to his institutional sales folks on Monday, and then they would go out and talk to the hedge funds and mutual funds with whatever the message. So just imagine Bill Monday morning is wildly bullish, and by Wednesday, the market's changed, and now he's more bearish than he was bullish. And that would drive people crazy. They couldn't understand how you could turn on a dime like that. But all the greats out there can do that. And that's so you see that being modeled. So I have no problem with that. It doesn't mean you're always going to be right, but you're going to be in phase with the market and not fight it and say, "Oh, well, last week I was so bullish, I need to figure out a reason to be bullish or bearish." Because you can always find reasons. You can make excuses on any chart. See something good, see something bad, fundamentals, same thing. We know how it is. You see people who rationalize. I've rationalized. I've been there before. You're in a stock and a gap stock. First stock I ever traded for him was Red Hat, and I bought it January 13th. The next day, it gapped down like 10%. My first trade. So I worked so hard for him. It was so hard to get this job to work with him. And my first trade is down 10%. And I had gone from being just in the zone and never vacillating on anything to my first instinct was, oh, maybe I should hold it. Which anyone who knows our system, once you're down 7%, you're out. And I'm down 10%. You shouldn't even think about it. You should just sell. So for a split second, I was rationalizing to myself and just realizing, wow, that, you need to do it the way whatever your rules are. Now, if your rules are you wait until the end of the day, then do that. But my rules were if I'm down more than 7%, out the door I go. And so I did end up selling it, but we've all been there where you just rationalize. So I guess the number one would be his flexibility. And that was, across the board with the market as well as individual stocks. And then the other thing was to study things with an open mind and to not be afraid to go out on a limb if you believe something. And so, for example, he was the first person that I'm aware of to really say the valuations are not a good way to pick growth stocks. And the way he did it was in those, everything goes back to the models. We built the models, or at that point he had built the models and saw that, okay, well, of all the stocks that went up the most, They didn't have low valuations at the beginning of their move. So if you are saying that you don't want a high PE stock, you're going to miss out on all the best ones. And even decades later, 50, 60 years later, people still don't want to hear that, and they want to argue that. Well, that's fine,
Yeah.
It's like, I don't, like there's difference of opinions,
Yeah.
but he went out on that limb, and I've gone out on the limb with saying, we don't want to get into it now because it'll be 4 hours later, but volume is dirty. So I've stopped using volume. And that's very controversial. For my career, it's silly to go out on that big of a limb, but I'm doing the same thing that he did with the PEs, back in the 60s, of saying the PEs didn't matter. I'm saying volume matters, but it's dirty. That's just my opinion based on my interpretation.
We'll get into that later. I don't want to fight till the end because I want to keep it. I want to keep it at a good tone. Yeah. The point about flexibility, though, is you made a point about all the greats have that.
Yeah.
So, and I've used this line before. Stanley Druckenmiller, who's one of the best hedge fund managers ever, says one of his greatest assets in the past 30 years is his ability to change his mind.
Yep.
David Tepper being aggressively short financials during the global financial crisis, and then when the government basically, TARP, TALF, all the versions of QE that they did, he literally went from being aggressively short to flipping and being aggressively long. It's one of the greatest trades he ever did, ever.
Yeah.
And
of anyone.
All of these greats that do these types of things, what they have in common is that open-mindedness and flexibility. And I know Bill O'Neill had the same, but you're right. It's hard for a lot of people because
it's an ego, right?
And I was going to ask, what do you think it is? Is it just, I decided I like this stock and I'm going down with the ship because I believe in this and I don't care if it's down 50, 90%. I believe, is it just, or I told my friend I liked it and I can't change my mind a week later or a few days later? I mean, what is it where?
I think you nailed it, because I think it's an ego thing. And even if it's on a subconscious level, right? You buy the stock, no one else knows that you bought the stock, and now it's down on you. And once you sell it, you've locked that in, and there's no more hope anymore, because you buy a stock at 100, now it's 92. Your rules tell you to sell it, probably at 98 or 97.
It's closure, it's finality.
Yeah. Then the stock comes back and you're going to feel like an idiot, and so you can sit in hope. And hope is a wonderful feeling, right?
Yeah,
but not in the market.
No,
fear, greed, and hope.
In Shawshank Redemption, hope is dangerous too.
Yes, exactly.
But the thing is, people, I say this all the time, in the example of 100 down to 92, if you sell it, you only remember the ones that go back to 100 or higher.
Yep.
You always forget the ones that drop into the 20s or lower.
Yeah.
People conveniently forget the ones that go lower and only remember the ones that turn around on them, so that conditions them not to want to sell.
I think you're exactly right. And what happens is people hear the stories of the person who bought Amazon way back when, or Apple way back when, and they held it through all this, but they don't hear the stories of the people who bought Pets.com or whatever, and held it into the dirt. And I guess one of the great things of building so many models for him is when I would do it, you would study everything for that year, and you see how much damage there is in big stocks, wonderful stocks that have made huge moves. Charles and I did the work on it, and it was, they come down about 72% on average. Most of them don't come back to lead again. So when you get a big NVIDIA that has had a huge run, everyone always thinks like, okay, this is going to be the one that is going to run forever. And it might be, just like we have some examples, right? Apple did that, and many of them have been able to come back and move up higher, but most of them don't. So the odds of you getting the NVIDIA or the Apple are
very slim,
very, very slim. And it's there's few and far between that are like that. But going back to your original thing, I just think that there's no longer hope once you sell it. So for most people, when they're in the deer in the headlights type of mindset, I go back to a story that Bill told me when I had messed up a stock. It was Genesis Microchip. Do you remember Genesis?
I remember the name, yeah.
Okay, GNSS, it's no longer traded. I think they got bought out or something, but they were the flat panel chip maker, and they were the maker. And I thought it was back in the CRT world, and the transition was just happening, kind of like the transition to AI. And I thought, okay, this is going to be huge, just like we're all thinking AI is going to be huge, and it will be. Flat panels, look around this room, flat panels everywhere.
Yeah.
But so I was piled into the stock, and this was 02, I guess. And the market was terrible, but it was during one of the tradable rallies. I think it was 02. And anyways, it came back into the 50-day. And normally with my trading, with having pyramided into this massive position, that I would have backed away at the top, but I thought this was going to be my big winner. And I didn't sell it. And then afterwards, we had a little conversation. And I didn't lose money on the trade. I just gave back a huge gain. I had a huge gain. Turned out to only be like a 2% gain when it was all said and done. And he said, Mike, you really need to not freeze up. And I'd never frozen up before, but as it was coming down, I was trying to hold for the big move. And I was seeing all these sell signals, but I was like, no, this is the one, this is that magical one. But it was the bear market that was bringing everything down, and it brought it with it. And so you can be super smart, be right on the theme, right on the stock, but the market could be the wrong timing. And his advice to me was, next time you're in that position, sell 6%. And I think he just picked 6% out of thin air, which Bill would do a lot of just
sell 6% stop or 6% of the position? Or
6% of the position.
Okay.
Because he knew that just selling 6%, then if it turns and goes back up, no harm, right?
Yeah.
But it gets you in that switching gears from just holding on for dear life to
slowly peeling
peeling
the Band-Aid.
Yeah. And then you sell the 6%, you go, oh, that wasn't so bad. I'll sell another 6%, I'll sell another. And then you sell it down to where you should, because typically it's not an all or nothing decision. There's some times where it's like, you clearly need to buy this stock. It's breaking out of a perfect base. You've got to buy it with volume for people who use volume. And there's other times where it gaps down 30%. You got to sell it. But most of the time it's a touch of gray, right? And so it's gradual. It's not all in, all out type of thing.
Okay. The rest of that question with lessons that you learned, because I know in the paper he would always have a lot of inspirational and top 10 rules and, do biographies on business leaders and so forth. What about personal life lessons?
Well,
I know there's a million.
There are a million of them. And I think his thing was to do for others. And that's what the newspaper came about. It was not a good business decision to try to take on the Wall Street Journal, who now, owns us. And it's great, working with a company that's got deep pockets and that can help us. But he was trying to help others through the newspaper, because the smartest thing for him to do was to just close up shop and turn it into a hedge fund and not even have the William O'Neill and Company selling ideas to institutions or the software that the firm had, or anything else. Just close up shop and just trade. But then that would be like the Jim Simons of the world, who makes all this money, but not helping others. And so he really wanted to help other people. And I was privileged enough to teach a lot of workshops with him. The two of us he was my idol. Being up on stage with him was just like the time of my life. And you could see that if there was someone in the audience who was clearly very well off versus someone who was probably scrounged just to get the fee, it was like $3,000 to come see him, or us, I guess.
Some of them more.
Yeah. The ones were like $8,000 or $9,000 for the weekend ones.
Yeah.
But he would care more about that person. You knew that they really struggled to get, that, or even when we were just out and about, and he would just be trying to help the average person more so than the institutions. He cared more when we would discover something new in the market.
Yeah.
The first thing he thought of was, let's put this in the newspaper or put it in what was Daily Graphs, which is now Market Surge, before it was like, hey, let's tell Fidelity about this new thing that we just figured out. Because he knew that they already, they have their team of analysts and they're super smart. They can figure out whatever they want to figure out. He wanted to help the average person, and that's a big part of what I try to do. And my parents were teachers. My father was a Marine. My sister's a teacher, and normal people is where that's the most important thing to me. Is just I love to help anyone. Like let's say you're a billionaire, I'd love to help you, but I'm more interested in helping people who started out the way I started out, where it took me 6 months to raise $540, not $540 million, $540 for my first trade. And I had to sell my CD collection, my music CD collection.
Oh, wow.
Because I was dirt broke. I was out of college, and just, not making much money. And, I was scrounging. And so I remember 6 months of trying to save every penny I could and sell the only thing I had of value, which was, this was before Spotify, before Napster. And that was a hard sell, man.
Your whole Columbia House collection of CDs. I had the same one. I think I still have it somewhere. Yeah. So that leads to one of the personal things, is helping others. Did you or anyone else, or did you hear anyone ask him, you have all this knowledge, you have all this information, why share it with the world and put together the books and the seminars and the papers and all that stuff? Did that ever?
It always came up. And
it did? Okay.
And he would say, well, you can only eat one steak at a time, which was funny because I was a vegetarian and he knew that. Or I am a vegetarian. It's been 34 years now. But so he would always say that if I was around, and he would say, we all put our pants on one leg at a time. And he just didn't care for the longest time. He lived in a teardown, like he didn't have time to deal with, then eventually he bought a different place and moved into it for a while, and then tore down his house and built it up into a big, beautiful, what he should have had, but he just didn't care. He drove an old car, beat up car. Like he just wanted to, he also knew that he had a bunch of people at the company that relied on him. And he would tell me, Mike, you got to take this, the trading very seriously, because we were running the capital of the firm. And he said, we've got 800 families who depend on us. We can't blow up, because we trade very concentrated portfolios, like very concentrated, times 100% in one stock. And he was known to do 200% in one stock. And this is the firm's capital. And that's a lot of stress.
That's intense.
It's very intense, because it's not just you're impacting. And that's what he always saw, that it was all these other people. And he really cared about the collective people that were the families that depended on him and the PMs for a living, as well as anyone who was getting the newspaper at the time for $1 or whatever it was. Like it was really, really neat to see.
So it's basically sharing is caring, basically.
Yeah. I mean, my thing is just to be kind to others. That's my motto.
Yeah. You have an incredible gift of, when you're doing your analysis, you can recall precedents from different markets.
Yeah.
You see a market and you're like, oh, this reminds me of 2003 low. This reminds me of the, 1960 something. And it's amazing, because going back to what we said earlier, history tends to rhyme a lot. How do you come up with that? Is that just,
Dude. Hours.
Is it just experience? Is it like instincts? Is it gift? Is it a little bit of a cocktail of all of this?
There's no gift. There's no instinct that I'm aware of. It was pure raw hours and hours. And that's all I look at on a normal day, 5,000 charts a day, and I have for decades. Okay. Easily.
I look at 500 to 1,000, so 5,000 is a lot.
And easily,
that's a lot.
That many.
I got to step up my game.
Well, no, I mean, it's just every chart that I look at, I'm trying to get a lot of information from. And one of the things is about is it a stock I want to buy? But really, it's about the health of the market. What sectors are moving? Is it small caps, mid caps, whatever? But it's also trying to build something in your mind. A model in your mind of when this bar does this, this tends to happen. And so the more charts you can look at, it's just like AI. Like the more data you have, the more you can say, oh, this reminds me of this, or this chart is acting natural and normal. And Bill would always go back and say, oh, this reminds me of Brunswick from 1960, whatever, and this reminds me of this. And at first I'd be like, how could he do that? Does he have a photographic memory? And he didn't. It was just that he would study these models so much that they would be etched in his brain, not from someone who's gifted with a photographic.
Some people do have that, though.
They do.
Where they can look at the charts and they can, but this is more of, I didn't mean to interrupt, but it sounds like it's more of really putting in the time and studying it so it's ingrained in your mind.
And that's how he did it, and then that's how I did it. And he would mark up his models, and I had access to, for decades, all of his personal models, and I would just sit there. I'd spend an hour, half an hour to an hour a day with his models, because I knew I wouldn't always have them and how special they were, with a magnifying glass, just learning and getting it ingrained in my mind of what his notes were, what his observations were, and then separately just what the chart was. And that's what people can do to get better, is to, there's no easy way. It was like like you always have so many great jokes about your working out and your abs and
I like making fat kid jokes all the time, I guess.
But there's no easy way, right? It's like, what is your workout routine these days?
Oh,
again?
I work out Monday, and then I work out Tuesday, and Wednesday I take 3 weeks off. Yeah. That's my routine, and I'm very consistent, though. That's the key. And I come back 3 weeks later. Yeah,
I love that line. That cracks me up. But with the market, you can't do that, right? If you want to get better. Now, if you don't care, just have someone else run your money, or just buy the SPYs, or in dollar cost average into it. There's nothing wrong with doing that. There's absolutely nothing wrong with having someone else do your money for you, or just dollar cost averaging into a good mutual fund or the S&P 500. But if it's fun for you, then take it seriously. I only know how to take things seriously. Like I either do it all in, or I just don't really care about it.
So I think that, I honestly feel we could talk. This is going to be one of like 100 series we're doing together, by the way, because I feel this, like, as you're talking, I'm like, I can't even get to the paper because there's so many things going through my mind. Actively managing a portfolio is not easy.
No.
People enjoy it. There are people who love picking stocks, or I go to the mall and I see this store, I went to this restaurant, I found this chain, I love this and I spend my money here. But actually taking that and applying it to actively managing a portfolio is a lot of work. My theory is, I use the golf analogy. You and I can go out and rent golf clubs and go golf in 5 minutes. Doesn't mean we're going to be good.
No.
We could go on our phones, fund a brokerage account, and trade stocks tomorrow. We could even trade after hours right now if we want. It doesn't mean we're going to be good. So the ease of entry into the stock market, I think a lot of people equate that with, oh, it's so easy to fund an account, it must be so easy to make money. But they don't understand the work and the whatever blood, sweat, and tears that goes into managing an active portfolio.
Yeah, so I have mixed feelings about that, because you see a lot of people getting hurt with, and I don't know where all the money comes from that people, because it came so hard. It was so hard for me to have money, and I see so many people just not really respecting the money that they have, that they're trading. So I think that's one aspect of it, that we're here in Vegas, and they think of it like gambling. I like gambling, but I will set, I'm going to spend this much money, and it's entertainment. Trading is not entertainment. Trading is a skill set, that you're trying to do.
Well, really quick, two things. It depends on if you're trading full-time for a living, or if you're working with a source of income and you're managing your retirement or an account on the side. So those are two different things.
Yeah. But anyway, if someone was hardcore trying to make a bunch of money from their trading, that is something that is really attainable now versus back when we started. You remember how hard it was. You had big slippage. You want to go buy a stock right now, well, you're paying, $100 for it. A second later, you want to sell it, you're paying, you're getting, 75 cents less plus your commission. Plus if you were doing an odd lot, then you're paying even more. The difference between that and now where, there's a penny spread, there's no commission, you can buy something, turn around in a second later and sell it with really no downside, which is one of the reasons why volume is dirty, by the way, is because there's no real skin in the game. Whereas when we started, you had to really think. If you bought something and you were going to turn around and sell it 5 minutes later, you're probably taking a % loss. Sometimes if it was a thin stock,
the slippage could be more.
And the commission.
Yeah.
So if people are trading now and they just open up a whatever Robinhood account or whatever on their phone, they should take it very, very, very seriously. This is not something to. If money is important to you, now if you're just a trust fund kid and you've got all the money coming, then it's not a big deal. But money is important, and you should really, if you're going to invest it, you should have rules. It could be whatever. It could be Warren Buffett's rules. It could be Bill O'Neill's rules. It could be Joe Fahmy's rules. Just have rules and be willing to learn when those rules need to be adjusted.
Yeah, and I'm not trying to discourage people from doing this, because investing in the right stocks, or if you hit a good market, can change your life or help you pay off something, a wedding, education, all that. But my point, I'm not discouraging people. I want to hammer the point that it's not easy. Just because, I turn on financial television and I like this company, that doesn't mean it equates to success in the markets. And you've been kind of hammering the point about the work ethic and the screen time and the repetition and the discipline that's involved in actively managing a stock portfolio.
Yeah. So you don't have to be super hard. If you're going, like your golf analogy, if we just wanted to go golf every weekend and get, get somewhat
have fun
good
with it. Yeah.
Then that's fine. And
Right.
you can do the same thing with your trading. Just don't put a ton of your own personal wealth in there unless you're going to take it very seriously.
Okay.
So if let's say someone's worth, whatever, we'll just call it $100. If you're not going to take it seriously, then only put $5 of that, 5% of your net worth in the market. It just, whatever you're willing to just lose all of, put that in the market and learn that way. But I just don't like seeing people get hurt. I want everybody to learn how to trade. I mean, it's the greatest gift you can give yourself is to learn how to make money using your mind. Now that it's so much easier, everyone should learn how to do it, but it doesn't mean that it's easy. It's you've got to put the work in.
Yeah. Regarding that, one of the most common questions I get, and I'm sure you get a lot as well, and I've been lucky enough to be invited as a guest on IBD Live, which I always have fun.
We love it when you're my favorite guest. And I've told people that.
Thank you. I love it because we all talk the same language and it's a great group of people. And a common question, whether I get it or you guys get it, is position size. So again, you have $100 to use round numbers. You want to buy a stock and people don't know, do I put in $1? Do I put in $5? Do I put the whole 100 in? When I go to buy a stock, and of course this isn't investment advice or anything like that, but it's just it's probably one of the top two questions I get is how do I position what I want to buy?
That's the right question to ask. And when we talked, whenever it was, when you were out in Austin and you told me your position size that you like to go with the 5% at max, I said, you're going to be golden the rest of your life, because at that percent, you will never blow up. You will never be under a serious amount of stress. I mean, when we were trading Apple and Google back in must have been the 04, 05 time frame, every one of the PMs on staff, we were just pretty much just piled into those two names on margin. So I had like 120 in Apple and 80 in Google, and other people had similar. And Bill encouraged that because that's how he made all of his money. And afterwards, I looked at it and just said, man, if we would have just had 25% in those stocks, we would have made so much more money, because at least I can't speak for them, but on a personal level, I would screw that up all the time because I was aware that as it was starting to come in, I better start selling, because if this comes into the 50-day, I'm dead. If it comes all the way in, so you sell too much and then it starts going back up and then you got to buy it back. So when you have too big of a position size, whether that's 150% for some people or 10% for others, it changes how you look at that stock. And so your position size, what you should do with the stock shouldn't be determined based on your position size. It should be what the stock is doing. So you coming up with that 5% for the way you like to trade, it's like, that's genius, because it's so different than how Bill wanted us trading. And he would say max eight stocks. And that was a learning lesson for me. That probably the biggest thing, it took me decades to learn, was I'm not Bill. I'll never be Bill. That was the hardest thing for me to learn. It's hard for me to say, because I always wanted to be him, but he would trade a very concentrated portfolio. Now, I trade a very concentrated portfolio at times, but sometimes I'll shotgun it and I'll do 30 or 40 names at different times in the market. And that was like sacrilegious. So with him, of not wanting to have more than 8 stocks, the point to that is find what works for you. You found your 5%, which is I think a sweet spot, because people will say, well, with 5%, what does it really do? If that stock doubles, is it really going to be meaningful? Well, yes, because you're actually going to be able to be in it for that double. Whereas if you put 100% of your account into it, you probably won't be able to get it for the double, because you're going to get wiggled and wobbled out of it.
Well, I learned this the hard way, because sometimes on my blog, I remember writing about a couple of stocks. I literally wrote when Netflix, I don't know, split adjusted, whatever it was, $60, $100, whatever it was. I literally wrote 5 reasons why Netflix would double. And it did more than double. It went up tenfold from there.
One of the best
whatever.
ever.
But I think I made I don't even know if I even made money. I forget the story. If I made 20%, it was nothing. And I had a friend of mine's like, okay, you put yourself out there. You listed the reasons you think it's going to double. You put your money in, you bought it perfectly, and you screwed up the trade. And I know why I did, because I plowed way too much into that. And I think that's a problem a lot of people have is, okay, if I buy a 1% position and it goes up, that's not going to change my life. If I buy a 100% position and it doubles, that could be, not life-changing, but could, have a good effect. But the problem with the 1% position is you can sleep at night. With the 100, you might not be able to. So what's the happy medium? And I know there's no right or wrong answer, but what's the happy medium of, I want to own something that'll at least move the needle a little bit, but not make me want to throw up on a normal pullback?
That's the right question. And there are answers for that. Some of them are just having rules to hold. So that was my biggest dilemma. I would do what you did with Netflix. I would plow, and I still do that. I'm doing that right now. If I showed you my account, you'd be like, Mike, what are you talking about? You're in 2 stocks up to your eyeballs. But, so you're kind of like cut a certain way, but so you're always fighting that. But I had this problem where I'd plow too heavy in, so have rules around that. But then I do a very good job at buying the initial buys, and pretty good job at selling, knowing when the stock is done. But those are the easiest things. The hardest thing is everything in between, from the beginning of the move to the top of the move.
Because the studies show that average move is what, 16, 18 months, something like that?
Yeah, typically, but that's a whole topic. And
again,
that's
a whole other podcast.
That's a big can of worms, and I'd be happy to come back for that. But so I developed some rules. I call them the Quicksand, Grateful Dead. They're available for free. I'm not trying to get any money out of it, of how to hold your position for the move, and where you do it gradually. You're selling a third, and a third with a Quicksand and Grateful Dead rules, and using the relative strength line moving averages. I put dorky names on my.
There are a couple with handles dorky, yeah. But you're throwing music into it.
I'm
At least
doing
it's better.
And I will call things like, I developed a thing called the Webby RSI, which is the really simple indicator, which is kind of there's a relative strength index.
Yeah.
And I started doing that because I created so much intellectual property that no one knows that I created, that the firm owns. I said, you know what? from now on, when I start making stuff, I'm going to put goofy names on it.
You can. Why not? I call a big rounded bottom a Kardashian bottom, and that's what works for me. And I don't care because I'm like, that is round and
my better half was probably watching this at some point, so I have no comment. I don't even know who a Kardashian is, man. What is that? Is that a book?
I don't know. We'll just have to edit that out.
Okay.
No, but you can make up whatever names you want. So, but to your point about the buying is not the easy part, but buying it properly and identifying, let's say, a first stage base, and then selling when the thing blows off. But in between, there's a lot of shit going on in between.
That is the hard part. So the in between, and that's the beauty of it, right? It's so much fun because there are times where you put on the gas heavy, and then when you get a slam on the brakes and everything in between. And so I just have these rules that I developed to fix my personal problem of not holding properly. So that's the advice I would give to people that backs into what position size they should have. So with my Quicksand Grateful Dead rules, I say, okay, if you're going to have a max position of 25%, use 15% of that for these rules. So 25% of your overall account, and then you could sell 10% of that however you want, but the last 15% use these rules to hold. And nothing's perfect, but is the best thing I've developed, I think. And I decided I could have just kept it as a secret for myself. That's a selfish thing. I'm a karma guy. I'm all about karma. It's like, I just give it away, just give it out there for free. And I think the world will come back, with, I'm a believer in that. We'll see.
Yeah. So you have a lot of these, and I know there's Webby RSI and then your power trend. And I mean, there's that's why I said in the beginning, there's 20 things you've either invented or, helped curate and all that stuff. I mean, again, this is a 2-hour conversation opening up this can of worms, but anything that is really well, first of all, where can everyone find a lot of this stuff?
I started a podcast recently, and it's on YouTube right now, and it's my channel is Webby 5150, and it's Webby Rambles On, because as you can tell, I tend to ramble on.
I love it.
It's actually Webby's Ramble On slight return, because I'm a Hendrix fan, and any Hendrix fan will know what that reference is about. But I was telling you beforehand is originally I started this just a couple months back. I wanted to have something to give to my kids one day if I wasn't around, and if you can hear it, I've got a vocal cord disorder, and in finding, going through all the doctors of figuring it out, at one point it was like, I might die, or before they figured out exactly what it was, and it really got me looking at life in a different way, and just thinking of how the short amount of time we have here. And I never talked about my trading with my kids, because when I was with my kids, my twins who are my life, that I just wanted to spend time with them, not like, oh, well, this is a cup with handle,
Yeah.
And so I wanted to have something for them, or when they have kids someday, if I'm not around, to say, this is what Grandpa did. And so I started the podcast with that, and with that in mind. So you'll hear me ramble on and tell silly stories that have nothing to do with trading at times, but it's there for my grandkids and my kids. But that's where you could get it. I'm on IBD Live every Monday, Wednesday, and Friday. That's a ton of fun and that's a paid thing through the firm. For free on Fridays, I do the SMT. It's on YouTube with Allie. And that's right after the close, and we go over, it's about an hour long, and I go through the market, and I would suggest everyone watch that every week. We have a very set thing that we go through, and it's a big deal for me. And then the second Tuesday of every month, Justin and I do the Swing Trader Update, which is also free, because I've picked the stocks for the Swing Trader, IBD Swing Trader, and I treat that very much like a portfolio, and I work with Justin on that, and he's so great to work with, because we've been working together since '98, and so we have a shorthand, and it's just I call him the saint, because he's a saint. He's I've never seen him do anything wrong to anybody, and there's very few people out there that you can say that. I could say that about you as well, and so maybe you're the saint number 2.
Yeah.
But so we do that for like 45 minutes or so, and it's free. I would suggest people watch that. But really, I'm very excited about this podcast that I'm doing, because I take a different thing that I've developed and I talk about it for 2 or 3 hours, which is nothing that I could ever do at work, because if I talk for 2 or 3 hours, then someone has to listen to me for 2 or 3 hours and they have to edit it, and no one has that type of time. So I just do that on my weekends, and I'm having a ball with it. It's like the most amount of fun I've had probably a couple decades, really, because I look forward to doing it. And you motivated me, seeing that you were doing your Joe's Happy Hour with all this cool stuff here, and you're a cool producer. Like it's you're doing it the real way. I'm just doing it in my office.
No, your fans love it, and you can tell you've taken some of the takeaways as far as sharing and being genuine. And sometimes it takes a while to explain something, because if someone emails me, hey, what about this on the chart? I'm like, I got to show you this on the chart. Yeah. I can't type this up in never mind a paragraph. I couldn't even type it up in 3 paragraphs or so. So I'm like, you know what? It's just easier to show you on the chart. That's what I found. So,
and you do a great job with all of your videos. And whenever I watch it, I'm like, yeah, Joe's got it down.
I'm trying. It's just I love
you're too modest.
I love what you're doing,
which is why I love you.
It's hard to balance the markets, which can be stressful, because I think we're both in the same camp of, I'm not doing this to be average. I do want to outperform, because the best in the world are the best because they've consistently outperformed, not 1 year, over a 10, 20, 30-year career. That's what I'm striving for. And that's why I was saying earlier, it's not easy. But I'm trying to do that, and as you are, but we're also trying to have a life too, and understand there's more to life than the markets. As much as we love it, there's more to life than money, as much as we all, it gives you a lot of freedom. But the point is, I don't know what my point is. It's just that balance. That balance is hard sometimes.
Well, I've failed at the balance. Hardcore, because I'm very black or white. It is like I said before, when I'm all in, I'm all in. Like when I developed the IPO base, that was after we were trading Google, and it was the only base that wasn't invented by Bill that we use. And when I did it, I didn't take it lightly. I sat for months and months. I got a printout from our programmers of every IPO ever in all of time, and I studied every single one. I wasn't about ready to create a base without looking at the full sample set, and that's how I roll. Now, as life hit me with my vocal thing and some other things that came up in life where I realized is very short, I've changed dramatically. I left I was running I was a head PM at a family office out in Austin, and I took a pay cut to come back to IBD, because at this point in time, I really felt that I knew what Bill would have wanted, and I wanted his legacy to continue.
Yeah.
And I felt like it was, I don't know if that's forever, or, if I go and start something else. But for now, I thought it was very important, because I knew that if he was up there looking down, that it was important for me to give back in that way. And I got great people I get to work with, wonderful. I'm not always the easiest person to work with, believe it or not, because I'm pretty picky with stuff. But he was very picky, so I'm kind of trying to take on that Bill role of it, and I don't always do a great job with that, to be frank. But going back to your thing about life, so that's why now I'm just changing, and it's not about, furthering a career. It's about just being around and seeing stuff. So I saw Sammy Hagar last night, going to see, and Bob Weir came out. It was a surprise. I'm a big Deadhead, obviously, and seeing Dead and Company tomorrow. And like normally I would just be like, no, I can't. I need to be back home in front of my, because it's always better to be at home in front of your own system than on laptops.
Right.
And I'm like, no, I'm going to start enjoying life, because you never know how long you have, right?
Amen to that. And I struggle with that balance too. I try, but I struggle with it because, when, successful people are always looking to get better and always looking to work hard and all that good stuff. But you're going to remember the concert, not, 100 more charts you looked at. That's what's going to be more memorable. So, but you can't just only go to concerts and you can't only look at charts.
Yeah.
And it's that work hard, play hard balance that I try, but I struggle with it a lot at times. And I know when you're striving towards something excellent, it is hard because, that quick story of Mark Cuban on Shark Tank, there was some guy who was like, he's pitching his idea. And he's like, and Mark Cuban's like, how long have you been working on this? He said, off and on for 10 years. He's like, I'm out. And the guy was like, what did I do? He goes, if you're not going to take it seriously, I'm not going to take you seriously. Mm-hmm. You got to be working on this 16 hours a day, for your whole life for me to take you seriously. And I get what he's saying, but there's also that balance of you got to have a life at some point.
That's what I'm working on now. I mean, I'll tell you a true story that kind of illustrates. I had a programmer once quit on me, and he said, as he was leaving, he's like, well, Mike, maybe you enjoy working 13-hour days, but I don't. And I was like, wow, 13-hour days, that's a vacation day. And I really thought that to myself. I was like, wow, it's only 13 hours. Like, what would I do with all that extra time? And then, so it was basically, if I wasn't in front of a computer, I would be with my kids. And if not, I'd be asleep, And I'm really looked at life in the last couple of years. It really changed everything. And, I've told you I went on my health mission and I'm trying to get as healthy as possible and lost about 80 pounds. And
congrats, man.
Thanks. Quit drinking.
You look great.
Gluten, which I love gluten, but gluten doesn't love me. Quit Diet Coke. Anything fun, but just trying to find that balance. And I still have a long way to go because I fall back into my work habits of just constantly working. So like one of the things I do is I won't put work email on my phone. I won't put we use Slack. I won't put it on my phone because I know if I have it on there, I will be glued to it.
Constant chimes.
24/7.
Yeah.
So that's one thing I think people could do is just not have, if you need to monitor something for work, go to your computer, but don't have it with you at all times. And that's not how it used to be. I mean, I remember, frankly, I was, wherever I was, Bill would always call me. I was in Hawaii with the kids, Bill would call me. I was at the hospital, a family member was, having a surgery, not life-threatening, but a serious surgery. And he was calling me up to find the fax number at this is going back in the day, the fax number at the hospital so he could fax me work because we were working on a project. And I was wrapped up into that and not even realizing how wrong it was until you go back in life and you go, wow, like you really need that balance. And I don't, I should know as a Van Halen fan that balance is an important thing.
Yeah,
Van Halen fans would get that. But so I live through you and I watch you on X and all the concerts that you go to and all the living that you do. And I go, I want to be more like Joe. And I'm serious. I'm not joking.
I don't even post I don't even post 10% of what I do.
And I know.
Because I don't want people thinking I'm just
out. You send me them and that's, I'm like, wow.
Well, when you figure out the balance, please let me know. I mean, I told you a sign of a good podcast. I just looked at the time. We're an hour into this, and
I'm sorry.
No, it's not sorry. I had 18 things here, and I think we covered maybe 2 or 3. So we have to do this again, for sure. Maybe even have a couple friends. Candy would be great to have.
Oh, that would be great.
The 3 of us yelling at each other in studio.
I watched every one of your episodes.
Oh, thank you so much.
And I loved the last one you just did, but the one with Tom, that was so special because we're both very good friends with him. And I was so happy for him to have him open up. And he's a very special person. And, and that was a really good episode. And I love what you're doing here. I love the musical guests. I love you've got a little bit of everything, and it's a good gig, man.
And you even learned how they did the magic tricks now.
The magic trick, that was, man, I don't want to give that away.
No, we won't give that away. Again, I feel like we can talk for hours. We do have to wrap this up. I can't thank you enough. You're one of the kindest souls that I know. You practice what you preach, which is hard for a lot of people to do. They say one thing and do another, but you're generously giving your time. I always joke, and it's not even a joke, you forgot more than I know in the markets. You have so much knowledge up there. I always think of when you're looking at a chart, it's like in Terminator when the screen's running in his mind and he's processing everything. That's what I picture, because you're like pulling out stuff and from your experience. This reminds me of this, and this reminds me of 40 years ago, and this stock reminds me of this from 1912. And I'm like, I just think it's an art, and it's amazing.
That part is fun because, and I know we got to end, but that's what I saw Bill do, and I always wanted to be able to do that. And the first time that I did it, I'm like, oh, this reminds me of XYZ. I'm like, it was like next level. It's like if you're, like doing martial arts and you get in different belts. It's like so anyone who's listening, when you get to that level where you're like, oh, this reminds me, even if it's not right, that just getting in that mindset, that is next level. And that's where everyone should try to get to. And thanks for having me, man. It was a lot of fun.
I'll leave you with the final words. And again, I can't thank you enough. Thanks for being a great friend. Thank you for your kindness. Thank you for just gracing all of us in the community with your knowledge and your life lessons and everything. But if you have any closing, and we'll definitely do this again.
Yeah.
So, but for now, if you have any closing words or closing thoughts.
Well, being kind to others. So, I was just thinking of what you did for me that was so kind. And can I tell the story?
Yeah, please. Go ahead, please.
So you're out in Austin, and we go to see, I'm a huge Eddie Van Halen fan, but I'm also a huge Wolfie fan. And we went to go see Mammoth, and, you got us in and everything. And we got to hang with Frank, and that was just what a wonderful person. And afterwards, and we were freezing out there. You're like, oh, let's just go over. I forget what story you made up, and I'm just frozen. I'm literally so cold, but I'm like I'm hanging out with Joe and with Frank, and this is so much fun. And we go over there, and then Wolfie comes out. You had Wolfie came out, and it just made and he was so nice, and He's got to be nice to everyone, but he was so nice, and he was so friendly, and you were so funny with him. And I just was like a little kid who didn't know how to put a sentence together. And I'm just so happy to see how successful he is without having to lean on his father. And because that's what, when I left IBD in 2020 to go do the portfolio management gig out in Austin, people wanted me to write a book. And I said, I don't want to write a book, my time with Bill. It would have to be something that could be totally standalone without leaning on if anyone ever even knew that I worked with Bill. And that's where then the podcast came from, because I was like, okay, I got to get this, for my kids and grandkids, but if I got to get something down and I don't have time to write a book, at least I want something out there of what I've learned to pass on. And I want it to stand on his own. And just like Wolfie, he's learned that stuff from his dad, but he stands on his own. You watch him, and it's like, it has nothing to do with his last name just got him in the building, got you to listen, but it was everything else that he was doing that keeps you wanting more. And I can't wait for his new album. Is the last song that he just put out, The End, from Mammoth 3, which will be coming out soon. I just can't wait. I'm just looking forward to, we got to go see that show.
Oh, for sure.
But anyways, that was my long-winded way of just saying, be kind, because what you did just really that was so, you didn't have to do that. Frank didn't have to do that. And Wolfie didn't have to do that. And just being kind can really change, a lot for someone, more than you would think. So thank you.
No problem. I remember we were having dinner with Frank, who's Wolf's one of his guitarists.
Yeah. And a great guy. And
an amazing, also a kind soul, and incredible talent musically and just as a person. And then when you went to the restroom, I was like, I was a little kid. I'm like, I don't know if it's too much to ask, but can Wolfie come out? Because I knew how much it meant to you, and it worked out perfectly.
Yeah,
and it was great that we got to connect you guys. And I told you he records all the parts by himself. Did I tell you that part? And when he does the albums, he does the bass, he does the guitar, does the vocals, does the drums, does it all. And then the band when they rehearsed, but.
He's unbelievably talented, and he's got a great voice too.
Yeah.
On top of that,
yeah.
like how
he you have a name like Wolfgang, you have to be good at music, but he's superseded even like everyone's expectations. So I'm glad we got to connect again. Thank you so much. Hopefully we can do this again soon.
Anytime.
And thanks for doing this.
Yeah, thank you.
All right.